to today's session. This is the first session of our series of 3 sessions, and for Audit Level 2, and I'm super excited to welcome all of you to this session. So Audit Level 2, that's all about planning, and we are going to spend quite a bit of time today thinking about planning and, of course, the first parts of that. So as I said, first of 3 sessions, so we will also see as to what we're going to do after this and where we are going. Before we get started, so just as a start, being in a webinar, you have all been muted, so you can't unmute yourself. So if you need to ask any questions at this stage, we will ask that you just hang on to those questions. We seem to be having a slight problem with the Q&A function. I will show you just now where to find the Q&A function. Alternatively, we will probably use the chat function. If you do lose signal, we recommend that you just simply exit the webinar, or if your Teams closes, we know even anything like that can happen. So if any of those crises happen, just go back to your link and join the webinar again. We are recording the session, so whatever you miss out, whatever you lose, you can always come back to afterwards. All right, so we are recording. We will make the recording available. It takes a few days, let's say about 5 working days, then we will make it available, and it will be on our YouTube channel. So you will then be able to catch up there. All right, so that is all with regards to the administration and the office. The basics. We'll also take a break. So I know a 3-hour session is very long for me as well, not just for you. So we'll definitely take some regular breaks in between. And of course, we are trying to make the session as interactive as possible. You're not just going to sit there and, I don't know, relax. We are going to be participating. So I really want to encourage your participation. Let's just see quickly, as soon as we get the Q&A function on, you'll see in the screenshot where, well, that's where you'll probably see the slides in that part, or otherwise you'll probably see a few of the delegates as well in the gallery view. And then right at the top there, you will see that we've got the Q&A function there, and then just to the left of that is where the chat is. So one of those 2 options will be available soon for you to ask questions, and then also to participate, or to participate in the workshop. Where do you find the slides for today's session? So all of these slides that I'm sharing with you today is available. I have saved them to a PDF file for you, and we loaded them up onto the Success Community there under Learner Resources. Point 7 you will see is, let me just move this one properly, point 7 Learner Resources. So I want to also just show you actually on the page itself where you will find it. So what you will see, and we also mentioned that last week Friday, is that the Success Community page is where you come, almost want to say, for anything and everything you need. If you want to see when your sessions are, if you want to see what is it that I need to do this week, am I doing e-learning, do I have a webinar, whatever the case is, for anything and everything, you go to the Success Community page. So this QR code that you're currently seeing will take you there. But also, if I just show you that page, I have opened it up for us. Apologies. Then you will see under this Get Ahead series, there we have all of the sessions, and you can go and have a look at the learner resources, the slides. Today's got a few working papers as well, but for Audit Level 2, Audit Level 2, whether it is Pro Premium or Audit International, both of those will be the same. So you can just use that tiny, or click that link. It literally downloads it quickly. It will download it for you, and you can find it in your downloads folder. Right, so there are some slides in there, and then 3 documents that we will use during our case study. So that is where you can then find your slides for today. Of course, that's if you want to make notes during the session. Otherwise, you can always go and look at them or find them after the session as well. All right, so that is the resources. And that then brings us to the start of today's session. So let's start then with planning. So in Audit Level 2, we are only addressing how to plan the audit, but we start right from the beginning through talking about client acceptance, continuance, then moving on to risk assessment later in the session, well, later in the series rather. So in the next session, we will look at risk assessment and how to respond to those risks, and specifically then at financial statement level, or if you think about it still as overall level from that perspective. And then in the third session, which is then in March, there we will address the assertion level risk assessment, and of course planning the responses to those. So the idea is that where in audit level 1 we gave you the planning, we gave you the work programs and said, let's go and do the work now. Now we are seeing what did the senior maybe do before that point to get to this point where we are now doing the planning, doing the risk assessment, so that we can almost in your imagination give that first year, give that junior trainee the work program so that they can get on with audit level 1. All right, so that's basically what we are aiming for in audit level 2. And as you would already be familiar, we've got the e-learning modules that I really do hope that you've watched at least some of it before today's session. If not, fear not, we will still be able to involve you, and you will still be able to learn and participate in today's session. But I do encourage you, remember, as I said last week as well, the majority of the content of the series is in the e-learning. So even if you hadn't watched it today or before today, please make sure that you catch up on those, and then you will also have all of the content with regards to planning. So the two topics that we will address today, or then maybe the two themes from the recording sessions, are client acceptance and continuance, and understanding the client. Right, so what is our table of content? We are going to track your location and objective, look at what it is that we're going to do. I've probably already mentioned a few of those, but at least we're going to look at that. Then we're going to work through some reminders on the process and why it is important to plan. So a few years ago, before we had ISA 315 that was revised in 2019, before we did that risk assessment and only really responding to the assessed risks, at that point, we often got to a point where we saw teams actually opening up the caseware file, running straight to the working paper, or rather to the work program, and starting to do the field work without assessing whether all of that work was necessary. Nowadays, when you open an audit file, you actually don't have steps in the work programs. You can't start doing your work because you have to first do your planning and your risk assessment. And so this process and the requirements from the auditing standards is forcing us to first go through the process and then respond, not to anything and everything, but only respond to what is actually a risk, and getting audit evidence only for what we really need. And let's not just audit anything and everything just because we feel like it or because we think we have to, but really go and focus on where the risk is, a true risk-based audit. All right, we're going to perform a practical exercise on the prior overs and unders, or the previous year's schedule of audit differences. And then we are going to look at some common problems and tips with regards to this session or section. All right. Good. Track location. Where are we? So in the whole theme of Formula One, we are also having a look as to where we are on the track. Where are we in the series for audit level 2? So in the videos that you had to watch for preparation for today, we looked at pre-engagement activities, or the acceptance and continuance series, and then also starting to plan, starting to document your understanding about the client. And with that, as you are already documenting your understanding of the client, you are already tailoring your engagement file. So whether it is adding extra questions about accounting estimates, or whether it is saying, no, the client doesn't have internal auditors, whatever the case may be, you are already starting to document your understanding about the client and starting to work through these points. So as we said, objective of this session is to provide you with an opportunity for questions after having watched those sessions. I will also provide an email if there are any questions that we don't maybe address or anything like that, so that you can ask that those questions in the in an email. I do also see, I just got a message to say that the chat has been enabled. So you are, or you should be able to use the chats now. I just want to see, yes, the chats are available. So now if you need to, you can add your questions or comments or anything like that in the chat. So just type that there. And yeah, if not, then of course there was an email address. I just want to see the email address again. Nonku sent it to me. It was, just give me a second, kaiswe.getahead@adapt.it. So let me just quickly type that for you here, kaiswe.getahead@adapt.it.com. All right, so I've put that in the chat. Maybe that also then shows you where the chats are so that you can see that. And then if there are any questions, you can also just send an email to that. Of course, while I'm presenting, I'm not going to be responding to it, but I believe there are one or two of the support people that will be assisting you with points from that perspective. That will probably mostly benefit you after the session if there are anything, but otherwise the chat's now been enabled. You should be able to document or record some points there. And as we complete the polls, you'll be able to participate there as well. All right, so I've said we're going to touch base on some of the points done in the recordings, and we are going to do that practical exercise later on. As a reminder, please, I'm not going to regurgitate everything from the recordings. I'm not going to touch on all the topics from the recordings. So there are some really critical points in the recordings, like accounting estimates, as we were also talking about what we're going to include in the session. We wanted to talk about accounting estimates, and then we also thought to ourselves, hang on, you guys have watched the recording, or you will be watching the recording. And so we don't want to just bore you with the same old. So please be sure that you are watching the recording when necessary. Right, so talking about those recordings, let's also test the polls and then make sure that you are able to participate in the polls. I'm going to launch the first poll that says, have you watched the material relevant to today's session? Now, please remember, I can't see what your responses are. I just want to see some participation, some involvement from your side. So please don't worry if you haven't watched it yet and now you're scared you're going to get in trouble. That's not the case at all. So just as a reminder again, there on the bottom right, the material consisted of video 1, 2, 3, and 4, which is all under module 1 in the e-learning. So that's just a reminder again. But for now, let's test the polls and let's see if you are able to participate in the polls. Just tell me, have you watched the material relevant to today's session? So please participate in that for us. Thank you. I see someone's mentioning or typing a response. There should also be a poll that pops up. Just want to see. Yes, it is popping up. So some of you may see the poll just higher up. I see a few people that are just typing. You may, I guess it's possible that you may not necessarily have a full-on Teams account, and that might be why you're not seeing the polls. So if you're not seeing the polls, please, by all means, feel free to respond in the chat as well. Otherwise, you can also submit a vote on the polls or submit a chat if that's necessary. Right. Good. I see there someone is saying she was not able to log in to watch the materials. Please will you send an email to that email address that I put down just a little bit earlier, just before the polls, kaiswe.getahead@adapt.it.com. They will then send you information. So you should have received a, what is the word, an automatic registration or self-registration. But if you have not yet, maybe you just missed off that cutoff with the registration, especially if you're joining one of the public links today. So please, as I said, don't worry, but I do appreciate your participation. If you are struggling to get access to those recordings, please get into contact with us so that we can give you those links and you can watch the recordings, because I would hate for you to only attend the sessions, the live sessions, and then miss out on the majority of the content. All right, so I see that the majority have said that they've not yet watched it. Not to worry, that's perfectly fine. I am going to close the poll now, and then we can move on to the rest of the session. Just want to see, there we go, back to the question. Okay, close the poll. Thank you for your participation. And we are then ready. Okay, good. Right, back to our slides. Good. So as a reminder then of the process of performing an audit. So this process involves, first of all, deciding the client itself. So the entity. Do we want to engage with this entity? There is always first the decision about whether to accept or continue that relationship with the client. And then once we've got the client, for every engagement that you are performing, you are always going through a question or a decision process to say, I'm doing work for this client, I'm already doing their tax work, or I did the audit last year. Do I want to continue again, do this audit this year? All right, so that is really important, that there is the client acceptance or continuance decision, which probably happens at firm level, and then also the decision whether to say, do we want to also either accept this audit engagement, or do we want to continue this audit engagement? So especially if I've already been doing work for this client for a number of years, and now they come and ask if I want to do the audit or can I do the audit for them. I remember one of the firms said to me, you know, the tax department does such fantastic consulting work that once they've done this excellent work for the client and they've received this fantastic service, then immediately they want to bring their audit to us as well. Well, we need to also consider whether we can then actually do the work, because it's possible that maybe some of that consultation work was prohibitive in terms of that we then cannot do the audit work because we're going to mark our own homework in the proverbial sense of the word. All right, so client acceptance, and then we get to doing the planning. Now, in terms of planning, you have this iterative process. And I actually went to go and look because the standard always talks about this iterative, and it's such a weird word. What does that actually mean? So iterative means you are constantly coming back to something to refine it, to improve it, to make it better. And that's actually what we do in audit. We are documenting understanding first year on the first document, things like that. And every time as we are working through the process, we are actually improving our understanding. We are improving the risk that we've identified. We are coming back and we are refining what the processes are in the client system every year and as we go through the audit. So even in the first year or even in a further year. So refining, improving the documentation, improving the understanding, improving where we do identify risks for the client. So that's the iterative process. And that's what those little arrows between those three blocks mean, is that part of getting understanding is also done when we're documenting and deciding on our strategy and audit plan. Or part of that is also done when we get our risk assessment. When I do the risk assessment, I might learn something else and go back to documenting and updating my understanding. Or as I'm documenting my risk assessment, I will obviously probably identify, decide on what my response is going to be, what my audit strategy is going to be. And as I then actually start to even do the or perform the work, I might come back and learn, but actually, no, it doesn't work like that. And I need to come back, update my understanding, update the risk assessment. So it really is an iterative process. It's not linear. I've done that document, moving along. It really is an iterative process where you're constantly updating and changing. Of course, at some point, I've got to say, right, I've done this document, I've got to sign it off now. But don't be afraid to go and add extra information when you do come across additional relevant information. All right. Now, where does all this information come from? Where we are obtaining our understanding and identifying risks and doing all of those things. So first of all, we have the prior auditor. Now, if it is a new client, a brand new client, then we have to actually go and contact the previous auditor or the predecessor auditor. So the standard is very clear. You may not take on a new client until you have contacted the old auditor and asked them if there are any professional reasons why you should not accept the engagement. So that is a must. The next part to the challenge is whether you must go and review that audit file and whether there are alternative options to obtain the necessary audit evidence that you need about the opening balances, about seeing what did the client's financial year start with this year before they went off and did the transaction and recording of all of those transactions and events during the current year. So there, it is preferable that you should be able to contact that previous auditor and say, please, may I review the audit file? But it is also possible that maybe that auditor doesn't exist anymore. Maybe the auditor says, no, I can't. Maybe the auditor says, no, I'm protecting my own risk here. I'm not going to show you my audit file. And then we need to go through options of how to actually get a different way of understanding, of confirming opening balances. Now, of course, then you can literally go and look at the general ledger and see that they agree to what was in the prior financial. So yes, the prior auditor is a place where we get information from. And please remember that you have to contact that prior auditor as part of your pre-engagement activities when you are deciding whether to take on the client or not. All right. Next up then is internet searches. Oh my goodness. Please do yourselves a favor and go and look up your clients on the internet. It's actually critical in today's world. I'm not saying do a full audit on their social media. I mean, some of that stuff could also be interesting and exciting, but it can also be very time consuming for you to literally go and look at everything. But you have to go and search on the internet, like just a normal Google search. Put in your client's name there and see, do they come up in certain newspapers? Are there indications that they are being investigated for certain things? Maybe they launched a new product, or they decided or started to export, or they got a new contract to export or import, or whatever it is that they are doing. And you can find that information from the internet. You don't have to go and ask the client, so what changed this year? Tell me what's new. But actually to get that information from there. It's even as simple as, if it's a brand new client even, or if you are new to the audit, to go and actually just look at the client's website. On there, they will tell you what they do or don't do. Yes, the information is not always 100% up to date. Not everybody's websites are always. I mean, it's not ideal, but yes. But that is already a good source, so that when you start to have a discussion with a client, you don't look, I almost want to say, you don't look like a palooka. That might sound a bit strange, but you don't look like you are totally uninformed and say, okay, so what is it that you do? No, you actually know already. You've seen on the website this and this and this. Or I saw in the last month on social media, you launched this new product, or you had this function, or you won this award, or whatever the case is. That's fantastic. Tell me a little bit more about that. All right, so that's also an excellent source of information. Then discussions. I've already started to talk about the discussions with the client, but don't just sit there and think, okay, so I learned I can go and look at stuff on the internet, so I don't have to ask the client anything. We know that we're sometimes scared of asking the clients information, but being a bit more senior, maybe you're a little bit more experienced, and you realize, you know what, they're not necessarily going to bite off your head. They're also just busy. And so when I do have my discussions with them, I need to obviously, almost want to say, get to the point, but and be informed. Like I said, if you already know stuff from your internet searches or from the prior audit file, you're not going to come across as if you are wasting their time when you ask them focused questions. And then secondly, discussions within your team. So yes, we need to have a planning meeting. And if you have not been invited to the planning meeting, it doesn't mean it didn't happen. It's possible that the partner and the manager maybe had that planning meeting, but then you've got to go and read the minutes of that meeting. You still have to be informed of that. At the same time, there are instances where we need to all talk to each other about information that we have. So let's say, for example, in terms of related parties, or in instances where we're auditing journal entries, and I'm saying, well, it gets audited in my colleague's section, and my colleague says it gets audited in my section. Well, that doesn't help us. We need to actually talk to each other and say, listen, who's going to do this work? Let's see. So any of those type of discussions are also important, and especially if you're new to the team, to get the knowledge and to, almost want to say, pick the brains of your colleagues who have been on the audit before, because they've got a lot of information in their heads, and they might be able to tell you how to do things differently or what to look out for in a section, things like that. All right, and then the prior audit file. Yes, the prior audit file is a wealth of information. What I do want to warn you about is that that prior audit file, firstly, is evidence and provides information of what happened in the previous financial year, what you found as evidence relating to the previous financial year. So don't rely on that as your be-all and end-all, because you are now at least one financial period down the line. So things may have changed. You might have different staff. They might have changed their markets. Their clients might have changed. Their suppliers might have changed. So much could have changed in that financial year. So yes, use that again as a basis. Use it to see what working papers did they do. How did they audit this section? Did it work well? Maybe use it to see how they considered certain things, but also remember that, yes, that file, never mind the fact that it relates to the previous year, that file also had trainees in there. So the same way that you would have found in some of your audit files where people would make maybe a mistake or document extra information or get it slightly wrong and then say, well, you know what, it's not worth us to go and fix this completely. It's not causing a material misstatement on the financials. It's not going to make us issue the wrong audit opinion. Let's just keep it as it is to save time and not waste unnecessary time and money. Next year, we'll fix it. So now we are in next year. So we need to be alert to the fact that no audit file is ever perfect. So last year's audit file might have had mistakes on, and I must not just blindly say, oh, it was done that way last year, so let's do it again this year. No, absolutely not. So please, again, ask intelligent questions of your team if there are things in there that seems a bit strange or that you haven't done that way before or anything like that. Don't just follow the prior file blindly. You might have heard that joke where they say, why did the auditor cross the road? Well, because in the prior file, they said they crossed the road. So don't just follow it blindly. Oh, goodness, going forward. And then the financial statements. Now, this one I'm kind of saying with in two minds. On the one hand, I know when we audit, the client hasn't always prepared the financial statements. And so that is often something we only get towards the end. But at the same time, you can look at last year's financial statements to see things like what are their accounting policies. Not all clients will have their accounting policies drafted in policy documents or things like that. They often go back to the financial statements. That's also proof. So if the client has drafted the current year's financial statements that you're going to be auditing and issuing the audit opinion on, then that's something to go look at. Are there facilities, for example? Who are the related parties that they are disclosing? Why did they disclose this one last year but not this year? I see last year they had a bond, but there's nothing on this year's financial statements. Why is that? All right, so of course, something like a bond can also be found in the trial balance, but the narratives, the disclosure, the notes, those things also provide us with valuable information. So yes, a lot of places where we can actually get information for our planning, for documenting our understanding, and then ultimately when we get to that next stage, to be identifying risks where things can go wrong. All right. So acceptance procedures. I've mentioned this before. I said we have to actually do acceptance and continuance procedures. We have to consider, do I really want to do this audit again this year? Well, last year the client didn't pay me properly, so do I really want to do it this year? Last year we actually suffered a loss. Last year we didn't have time to do this audit because we had other important clients who also had to be audited at the same time. So do we really want to do that again this year? Now, it's possible that you may say that the clients that you dependent on all of that money, it's possible that you may say, well, let's just do them a little bit later, all of those things, but we still have to go through that consideration. It's possible that the client still hasn't paid you from last year. So what are we doing this year? If the client still hasn't paid you from last year and you are already taking on the new audit, there's a possible risk that you're not going to get paid this year. Right. So we really are, to a large degree, we are protecting our own risk. We are protecting ourselves and not just assessing the risk of the audit. All right. So reputation. Who is this client? What do they do? What industry are they in? And remember now, we've already read done the internet searches. We've read the financial statements. We've spoken to the client and we ask ourselves, listen, is this really something we still want to be involved in? Is this something that where they maybe started to work in a new industry and we actually don't have experts to help us to audit that industry? Do we have someone that we can actually recruit, someone that we can get to help us to audit the specialized industry? Or is it actually something that we need to really apply our ethical mindset to and say, you know what, I actually don't have the experience and the knowledge, I need to step away from this. Maybe that's the case. So in terms of reputation, it's also our own reputation. If I get it wrong and the audit opinion goes out and it comes back that actually we didn't know what we were doing, that's a little bit embarrassing. Eh? And I'm sure I don't need to remind you of a number of cases over the last, I want to say about 10 years or so, where things like that had happened, where people got things wrong in the audit and then afterwards it turned out that they didn't have enough staff to do it. They didn't have the necessary expertise to audit that specific section or that specific industry, and a number of things like that. Maybe they just got involved with an audit where they knew they could charge a lot of money, but actually it's not the kind of thing you want to be involved in. Maybe there's an indication of money laundering, or everybody suspects them to be involved with money laundering. So that's definitely not the kind of thing that you'd want to get involved in. So reputation. Secondly, ethics. I guess the first question is independence. Are we independent? Are we seen to be independent? So what we don't want is for ourselves to know we are independent, but from someone else looking from outside, whether that is, I want to almost say a journalist, or the code of conduct talks about the term the reasonably informed third party, RITP. So the reasonably informed third party is not just that journalist or that guy sitting on social media behind his computer typing all kinds of nonsense. That is the person that says, I am an experienced auditor, have no knowledge of this client or of this scenario, but because I've got experience as an auditor or as an accountant, that reasonably informed third party, I can apply my mind to the facts and circumstances and come to a conclusion. And as someone who's not involved in the audit in the firm or something like that, if I apply my mind to these circumstances, what is my conclusion? Is my conclusion that this auditor is independent or not? That they are treating the information confidential or not, or whatever the case, professional behavior, anything like that. So we need to be very, very aware of the fact that we have to consider whether we can comply with the code of conduct, with the ethical requirements. And I'm mentioning the code of conduct, but please also be aware of your local legislation. In a South African environment, for example, there are also requirements with regards to independence from a Companies Act requirement. If you have been doing the audit for 5 years and it is a statutory audit, you've got to cool down. If it's a public interest entity, then there's even more things that you can't do in terms of the code of conduct. So there are a lot of considerations, and we have to make sure every year that we can comply with those requirements. All right. Let me just quickly check reputation, ethics, and then in terms of business continuity. So can we take on this audit? I've mentioned before whether we can use the staff again, whether we can do the audit at the same time that we are busy with other busy clients. So all of those kind of things is for us as well. So this is not where we are considering what is the client's going concern risk. That's not so much. It's about us. I spoke earlier about whether the client can pay the fee. So if we are doing this audit and we are spending weeks on this audit, investing a lot of time and effort, which ultimately lands up being money in our work in progress, and then the client doesn't pay us, what then? Can our business still continue, or are we going to run into trouble? Okay, so from a reputational risk for ourselves, can we comply with the ethics, and is there business continuity for us? That is all really important. All right, next up, again, another question. So I'm going to launch the next poll question, but please, I understand from our colleagues here that if you don't have a Teams account, if I look at this now quickly, if you don't have a Teams account, then it seems to me that you cannot actually participate in the poll. We'll have to make another plan for a next session, but then, yeah, please, by all means, just put your answer in the chat, and then we can also use that. All right, so as part of complying with ethics, as part of considering when we can comply with the ethical requirements, there is also this rotation of engagement partners. I've mentioned it before. And both, again, a requirement from the Code of Conduct as well as in certain legislation. There's also cooling off and things like that. So have you ever inspected the firm's rotation schedule or the firm's rotation table or anything like that? So have you seen that and looked at that before you then went off to go and decide, yes, we can take on this audit. Yes, we can continue this audit. So I see a few responses. I see someone saying yes. I see a few saying no. So very interesting. I'm not sure what that is even. What is that? I wonder. So that's fantastic. Thank you for saying, oh my goodness, I'm not even sure what that is. What is that? And that's perfectly fine. If you are saying no, you've not seen it, well, maybe you haven't had to. Maybe you haven't had to make the decision. But at the same time, also, maybe you didn't even know it was there. So we'll discuss just now, what is the rotation schedule or table and why must I use that? Okay. So I see a number of responses. Thank you for your responses. Just going to give another few seconds for you to respond. Oh, that's a very relevant point. I'm not sure what it is or where to find it. Another one. Where is this? Is it actually freely shared with all of us in the firm? Okay. I just want to see quickly. Right. Good. Good. Thank you very much for everyone's responses. Let me go and close the poll then. I think we've got a lot of responses. That's really fantastic. Thank you. Sure. I'm looking at the previous response. Okay. By far the majority are saying, I haven't seen it yet. I'm not necessarily sure where it is or where to find it, and I have not looked at it. All right. So from that perspective then, great stuff. I am very excited then actually that I can tell you a little bit more about this one. Good. So what is a rotation schedule and, well, where do I find it? Well done to those of you that have seen it before and that have referred to it. So essentially, if we start from the Code of Conduct, the requirement is that after every, let me think about it now, I think it's every 7 years, you have to, the engagement partner has to rotate off for public interest entities. They have to rotate off for 2 years, and in those 2 years, for example, they can't do engagement quality reviews, so they really may not be involved in that audit. From a Companies Act perspective in South Africa, there after 5 years, again, for a statutory audit, you must rotate off. You're not allowed to do the audit. And again, 2 years of cooling off period is what they refer to. You're not allowed to then do the audit or be involved on the audit. So what some people do is that partner may still possibly be the relationship partner, but someone else then actually performs the audit. There is a possible, I don't want to call it like an intimidation threat, but there is a possible threat where the person that's trying to maintain the relationship may actually not be objective in that regard. So it's not always, from my perspective, my personal opinion is that's not always the best way to do it, but I understand also from a business continuity perspective that you kind of want someone to carry over that relationship. All right. So the persons have to then rotate off, and this is critical to get it right. So if I've been doing the audit, let's say for 2001's financial year, 2, 3, 4, and the 2025 financial year, which let's say was the February 2025 financial year. If we then have to take on the audit for February 2026, you and I may not be the audit partner for that audit again this year, and we have to then rotate it. Now, that's all fine and well. We might have it in our system of quality management, in a schedule somewhere, and all of those things. But the guys on the ground, you guys doing the audit planning, you have to know about that, and you have to be able to go somewhere to go and check that. So yes, in the firm system of quality management, there will be this table or the schedule or something like that that says, these are the years. Mine was always in Excel, these nice little visual things. These are the years when the partner may, and then I block out the years when they're not allowed to, when they need to cool off. And then in those years, next line, the next partner's years are reflected and then blocked out after 5 years. So however you actually show it in a schedule or in a PDF or whatever the case is, it is important that the team who has the individuals who has to plan, the staff planner, or allocate the clients to the audit partners, the person who has to actually complete the forms to say, can we take on this client? Can we continue this audit? And filling in this file and saying, oh, Joanna, as the engagement partner, needs to be able to say, hang on, let me check that rotation schedule. I must know where it is, and I must go check it and say, for company ABC, or in the videos we are working with wrap up, for that entity, does this engagement partner have to rotate or not yet? Is he or she still allowed to do that? So that's where it's then quite important for us that we want to make sure that that person, that engagement partner can still be the engagement partner, or if he or she has to rotate off, that we realize that at the start, before we assign this to his plan, to his calendar, and that we then obviously bring in the right partner, the new partner, early enough. Also for the client, I actually read something just yesterday to say, that was with regards to fees, but I think it's almost anything in business, is to say there's nothing as bad as a surprise for a client, rather than a change, whether it is you increasing your audit fees or the engagement partner is changing or anything like that. If we mention that, and I almost want to say prepare our clients early enough, it's not ideal always, or the client wouldn't necessarily prefer it, but at least they've got time to adjust to that. But if I just throw that at them on the second day of the audit and say, oh, by the way, I can't do the audit anymore. We've dragged in this one. He's going to sign the audit for you. That's a little bit of a surprise and might not necessarily sit so well with the client. So it's important that when you do the planning for an audit, when you have to complete the audit engagement documentation to document this decision, that you know where to find this rotation schedule and that you check it and make sure that the engagement partner that has been assigned to this audit can still sign off on that audit. All right, good. The next question. Is there a requirement to always contact the previous auditor when accepting the client relationship? And I think that one I've probably almost given away before. Let's quickly just launch that poll, or if you are just documenting or responding in the chat, you can even do it from there. But to say, must we always contact the previous auditor when accepting a new client relationship? Right, I see quite a number of responses coming through. Thank you. Whether it's on the chat or in the poll, that is all great. Thank you. Okay. Lots and lots of responses. Thank you very much. I am going to close the poll for us. We've got a lot of responses, so I think we've got something to go from. I love that last one that I'm seeing coming in capital letters, so fabulous. That is indeed, the majority of you are saying, yes, we have to always contact the previous auditor. So I mentioned it earlier on as well, where I said, when you are taking on a new client, you have to contact the previous auditor to ask if there are any professional reasons why you should not be taking on this client. So that has to happen. Now, if the auditor doesn't respond to you, you've got another problem. You've got to phone him up or things like that. But you have to always contact the predecessor auditor to ask if there are professional reasons why you should not. Let's say, for example, the client comes, or the auditor comes back and says, well, we had a disagreement about the application of an accounting policy, or about the appropriate accounting policy, or things like that. Or the auditor comes back and says, well, we had to report a no-CLAR matter or a report to irregularity matter, and the client wasn't very happy with that, and they decided to go to another auditor. That happens often, that they are almost like upset about the fact that you went to go and report them because they're not, their VAT records are late, or whatever the case is, all right? They may be trying to hide it, or they didn't want anybody to report them, or whatever the case may be. But that sometimes upsets them. But remember, if your engagement letter properly informs them that you have this professional obligation. You should report them if that is the case, if it's a report with irregularity. Then yes, they're going to be shocked if you do report them, but it's your professional obligation. You informed them before and in your engagement letter. So that is what it is. And so if you have to then lose your client because of that, then that is unfortunate. Now, you being then the new auditor coming in, it's not so much a problem for you if there was a report of irregularity that was reported, or if there was no clause that was reported, or even if there was a disagreement about accounting policy. But then you know there is something that you need to ask about. There is something that you need to investigate a little bit before you say, right, I'm happy to take on this client. Why? Because it's possible that this was just, listen, we had a disagreement about how much to provide for the trade receivables that's not recoverable, and this was the reason. This was our calculation. You can maybe look at the calculation and determine, okay, that's fine, I can live with that. But if it is really that there's I must want to say, critical misinterpretation, a critical scenario, how you are actually thinking this should not be the case, and you agree with the predecessor auditor, then you can already say, listen, I can't take on your audit because this is going to be a problem for us, and I would rather not take on the audit and then, almost want to use the word, sit in that fight with you, then have that disagreement, and then next year you're going to go and look for another auditor again. Right, so it is important that you always have to contact the previous auditor to ask for those professional reasons. What is not necessarily required is that you don't have to review the audit file for opening balance testing. You don't have to review the audit file to agree or to make sure that the comparatives have been sufficiently audited. If the auditor, that previous auditor, really does not want to give you access to those things, and you really cannot get evidence about those, well, then you might need to go and test some of those things yourselves. Okay. Or in terms of opening balances, if you literally go and look at what are the balances that they brought forward in the new financial year, sometimes you can even confirm it through that. All right, so looking at the audit file from the prior, yes, that's convenient, but it's not the end of the world if you don't review that file or if you don't have access to that file. But writing that letter to the previous auditor and saying, please let me know if there are professional reasons, that you must do. And it crossed my mind earlier, but then I forgot to mention it at that point. Remember, you need to ask permission from the client to contact the previous auditor. You have to have permission to contact the previous auditor. And I can't for the life of me remember the section in the code. I think you'll forgive me for that. But there is a section in the code that actually says if the client does not want to give you permission to contact the previous auditor, you are not allowed to take on the client. Okay, I'm going to say that again. If the client does not want to give you permission, he doesn't give you permission to contact the predecessor auditor, well, that's red flags. So then you are not allowed to accept the client. Right. So that is a very definite yes, we have to take on. We have to contact the previous auditor before accepting the audit. Right. Next question. Whose responsibility is it to ensure that the acceptance and continuance procedures are performed? So let me launch that poll, or if you already know that you are going to respond in the chat, you're welcome to start responding in the chat. Good. Whose responsibility is it to ensure that acceptance and continuance procedures are performed? And this is, of course, not just on the new audits. This is on all of the audits, so the continuance one as well. Whose responsibility is that? I see a lot of people saying engagement partner. That's fantastic. Some saying the manager. Got a few saying it is the senior or the AIC or the auditor in charge. See a few in the chats. Lots and lots coming through for the partner, I see. AIC. Quite a few responses coming through. Thank you for your participation. I really appreciate it, because then I also know that you are there. I'm just talking to a little light. So that is fantastic to see your engagement in the session. Right. Yes, that is indeed the case. The engagement partner, as we are showing from the majority of the poll are, in fact, let me just go back to that one live. There we go. The engagement partner is the person that has the responsibility to ensure that it is performed. So it's maybe a bit of a tricky question, that one. So it's not who fills in the forms on your audit engagement file. Yes, that's possible. That could be your senior in charge. That could be you, maybe in your role as a second-year trainee or the person in charge of the audit. It could sometimes almost be anyone. Okay, so it doesn't matter who fills in the forms, who ticks the boxes, but it is the engagement partner's responsibility to ensure that it gets done. And secondly, as you would have seen in one of the first documents there also, where we have that test for ISO 220 to say the engagement partner must also not just ensure the engagement acceptance procedures were done or the continuance procedures were done, but also that the conclusion is appropriate. So it is the engagement partner's responsibility to make sure that the firm's policies and procedures for taking on a client, taking on an engagement, or continuing with those, that those policies and procedures have been complied with and the necessary documentation has been completed. That is probably then done through signing that document or approving that document. But as I mentioned, doesn't mean that person has to be the one physically ticking the boxes and filling in the forms. All right. So thank you for your participation there. Right. Then, if only one of the preconditions for an audit is met, we can still perform the audit. So this one then obviously talks about the preconditions for an audit. Now, you might think about those. What are those again? That's an interesting question. If only one of the preconditions are met, so the standard says these things should be in place for you to accept an audit. Is that fine? Can you accept if it's only just one of them, or is that a problem? Let's see your responses. So the option is if only one of them are met, true or false, we can still perform the audit. Good. I see a lot of responses for false. Again, I've got some users in capital letters. False, false, false. Absolutely. So, I'm on the wrong. Here we go. Next one already. Goodness gracious me. These polls are a challenge for me today. All right. So, absolutely, you cannot accept an audit engagement if all three, I'm going to loosely say three, I'll explain why just now, are not met. So the requirements in there, now I need to remember them, is firstly to say you have to, the client has to accept responsibility for a number of things. So that's what I'm saying loosely. They have to accept responsibility for the information system to record the transactions and ultimately the process for preparing the financial statements. They need to accept responsibility for preparing the financial statements. They need to accept responsibility to give you the information and not limit scope, not basically accept and undertake to give you access to the information you need in order to do the audit. And then you need to have that in an engagement letter. So those are your preconditions. Now, oh yes, sorry, and the other one, I was mixing them up again or not counting them correctly. The other big one is you need to have an acceptable reporting framework. So the client's framework that they're using, whether that is the IFRS or IFRS for SME or their entity-specific basis of accounting, you need to assess that framework and conclude that that framework is an acceptable framework, meaning it has to be able to be auditable. You must be able to audit that. And that doesn't mean it must be a fair presentation framework. It can also be a compliance framework that just says the client must record it as this. Yes, they have. Let's move on. Or the client has not recorded it because the recognition criteria said they're not allowed to do it. So there's compliance. Do it this way. Don't do it that way. Or fair presentation is the rules say do it this way as long as it achieves fair presentation. All right, so the framework must be acceptable. The client must take the responsibilities that they need to. We need that engagement letter, and then we can take on the audit. Not if any of those are not met. Again, we're not allowed to take on that audit. All right. Let me just quickly take a sip of water. Right. So, why is it necessary to plan the audit? Now, we've already mentioned that when we open our engagement file, the stuff is not just going to be there by itself. We need to actually go and plan it. But more so than that, there's other reasons why we need to actually plan the audit. So first of all, it's going to tell us where we are. I just quickly want to go to some of my notes here because I remember there were a few points that I wanted to make here. So it will help us to see what we are dealing with. It's going to tell us what type of risks we have, how we can or can't respond to those risks, all of that. So if basically, I just want to say in audit language, if we don't understand the client, if we don't plan how to do the stuff, we're not going to know what we need to do. So it's almost like, you know, those cases where you need to put a budget together and you actually don't know what's involved. So how can you put a budget together? Whether it is for a holiday that you want to go on, whether it is your auditing budget, whether it is your study plan for your studies, anything like that that you need to plan, you actually cannot plan for it if you don't know what is involved. So that is why we are planning our audit and why it is important for us to first plan. You know, again, it's probably such an overused quote, but there is a quote that says, if you fail to plan, so if you don't do your planning, you actually plan to fail. You are setting yourself up for failure if you don't first plan, because you're not going to know what to do. All right. Secondly, it indicates to us the dangerous corners. Apologies. So in our whole Formula One theme of this year's Get Ahead series, the dangerous corners are those points where we're going to identify the risks, the things that we need to address. So if we don't plan and see where the risks are, we're not going to know what to respond to. If we think about the Formula One, if we don't know what the track looks like, we're not going to know when to brake, when to go fast, when to start turning early on, all of those things. All right. It also helps you to create your audit strategy, to try to know how to respond to things that you're going to find. I mean, I always think about maybe a very silly example, but just something silly is to know what I need to do first. If I think about materiality, for example, I believe that when you are responding in your audit, you have to first test the section that you used as the benchmark for your materiality calculation. Why? Because if your materiality has to change because there's a material misstatement in your benchmark, you could do that early on. You don't have to then at the end of the audit, after all the sections have been done, say, oh, sorry guys, there's a big mistake in revenue. We have to do an adjustment. Materiality has come down by 50% or 20%. Please go back to all your sections and check if your sample sizes were big enough. And we can't do that. That's not efficient. So we want to make sure that we create that winning strategy. And so how are we going to do that? When we plan, when we say, right, let's set our materiality. Let's know what benchmark we are using. Let's plan how we need to respond to those. That's just one example. There's obviously lots of other things. Understanding the client, understanding what the systems are, understanding who the staff are will help us to understand that all 5 of us can't expect one accountant to respond to all our queries at once. Can't expect the one accountant to send us all the schedules we are asking over month end, now in the next 2 weeks, maybe when she's preparing a provisional tax and doing all the payments and salaries and whatnot and all those things. Okay, so it helps us to plan what is going to lead to an efficient audit. Showing the track limits. Well, we only have so many people to do the audit. Never mind the accountant that we spoke about, but what resources do we have available? I've been involved in audits where, especially IT, we're going to talk IT later on as well, but where a team would come to me almost halfway through the audit and say, you know what, this client system is so big that I actually cannot export the general ledger to Excel. What now? Well, we wanted to know that before we started the audit so that we can plan to use an expert, to use other software so that we can analyze the GL, so that we can get the information from the GL. We can't do that when we're already busy with the field work. It's too late for that. So we need to know what the limitations are. We need to know what to look out for so that we can plan around that and still, critical, get sufficient appropriate audit evidence. Things happen, there are sometimes things that we don't plan for, but we need to make sure that we still get sufficient appropriate audit evidence. And the earlier you realize about, almost want to say, limitations about things that you're going to come across, the better, because then you are going to be able to plan for them. All right. Right. Oh, yes. The discussions. We also need to have discussions with the no, it's not about the discussions. It's about the resources, the fuel that I need, how many people I need, the software, the days, how many days is it going to take, all of those things. We really need to make sure that we plan for those, so that we also know, what, one of my trainees is going to go on study leave for whatever it is, for CTA, APC, whatever it is. And I need to plan my audit around that. So that trainee is going to do a certain section that I know he can finish before he goes off on study leave. Or the other trainee that's going to come in, I know she's very experienced with inventory. So I'm going to let her get everything ready get all the schedules already. So that when she comes in, she can just hit the road running. So all of those things are quite important. And then in terms of exercise of gathering data, well, we are trying to get an audit engagement file. We're trying to get sufficient appropriate audit evidence, but also the play on the words here in terms of a Formula One theory is that some of you may know that when they have a Formula One a race, they often have like warm-up laps or practice runs a day or two before. And the point of that is to get to know the layout of the track, to see where are the corners, to see what's going to happen, to really understand where can I go as fast as I possibly can so that I can overtake a person, or when do I need to be really careful because I really struggled with that corner. So understanding, documenting, getting the evidence so that we know how to respond. I was even reading up the other day about about the cricketer. It's a cricket player who is playing for the US. He's South African. He grew up in Cape Town, and he's actually now one of the star cricket players in the US. And what he said, I'm going to tell you now how it comes back to audit, but what he said was that what his team does, so he's the one maybe doing the bowling or whatever it is, but he's got a support team behind him that helps him to gather evidence of how another, not a bowler, the batsman from the competition, from the other team, how those batsmen bat. And so what he does is he really focuses and studies those batsmen to see exactly how they bat so that he can adjust his bowling according to how they bat. So this guy is a really big star in the T20 that we currently have, the World Cup, and that is part of his strategy, is to really go and study the competition, get to understand and know how he needs to adjust things. And I'm getting goosebumps telling you about that now. It might be my aircon that's a bit cool, but I'm also getting goosebumps because I'm almost so chuffed at saying there's another real world scenario showing us that we need to adjust to the way that things need to happen. And if we don't know our client, if we don't go and get evidence and understand the client and do system descriptions and walkthroughs and things like that, do you really know how did the client's transactions end up in the GL, and how did the client use from the GL get to the financial statements, so that I can audit that, so that I can understand where the issues may be, so that I can understand I'm not going to get this report. I can't go ask the client for a delivery note. They don't use delivery notes. Things happen this way or that way. Then I can adjust my audit approach, my audit steps, my responses according to that. All right, so it really, really is important for us to plan, to perform these steps when we are planning. I want to almost say with purpose. There's no point in just completing documents if we don't understand why we are doing them. We have to understand why we are doing those points. Otherwise, we are really actually just filling in documents that's not going to be of any worth. I'm almost getting ahead to the tips that I want to also remind you of at the end. But really now already I want to say, it's important that if you don't know why you are doing something, stop and ask. Why are we doing this? What are we trying to achieve? What is the objective of this step, of this question in the form, so that I can use that understanding to do it better? If I'm just doing something because the form said, or last year's file did it, or whatever the case, I'm going to miss when somebody tells me the wrong thing. I'm not going to understand the impact of a response that I'm going to get. So it really is important that we understand why we are doing certain things. Right, ladies and gentlemen, this is an opportune time for us to take a comfort break. It's 10:05 now, according to my clock. So I'm going to give us 10 minutes of comfort break. Go grab a coffee or stretch your legs or do what you need to. And then, okay, I see it's now gone 10:06. So let's say at 10:16, according to my clock, we will start again with the remainder of this session. Thank you for your participation in the meantime. And we are going to continue, and we are still going to do an exercise as well. So if you maybe happen to not get the notes, I think what I might do is I might actually put up that slide for the QR code if you want to go and download the folder and then maybe get those documents. So yes, I see that comment coming through about the slides and the stuff for the attendees. I'm going to share that QR code with you just now. Let me quickly go there again. Now I'm typing stuff in the slide notes instead of change. Oh, there we go. Right. So slide, that is then the QR code. You can use that QR code. It will take you to the success community, the page for Get Ahead, and you can just scroll down. Well, you almost don't even have to scroll down. It will probably be on your first screen because this is literally the screen when I go there. Learner resources, and then under learner resources, you have a folder for today's slides as well as the exercise that we will be working through later on. All right, so I've talked a lot now. Enjoy your break, and I will see you when we return. right, ladies and gentlemen, thank you for coming back. Welcome. I hope you had a good break. Yeah, I know that was a very quick, short break. I also struggled to get back in time, but here we are. Then I'm just going to kick off and just say, let's start with the next poll. I want us to start with this one that says discussions with the accountant only are sufficient to meet the requirements of the standards. So we've spoken about planning, we've spoken about acceptance. Now we are saying, okay, when I want to talk with the client, is it enough to speak to the accountant? Just find that one. Discussions with the accountant only are sufficient. True or false? And again, if you can't necessarily submit the poll, then just adding your response in the chat is also welcome. Sure, we've got a lot of responses. Thank you very much. Thank you for your responses. I do wonder if everyone is back yet. It looks like I might have started a little bit quickly because I don't see everyone's responses. There we go. Some extra uptake on the responses. I see one person, like I said, I can't see who it was, but one person said, yes, it is good enough just to speak to the accountant. Now, of course, I guess it is possible that in some cases you're going to have one person that does all the work. You're going to have a very small business that really doesn't have anybody else other than just the accountant. Maybe that's even the person running the business themselves. So I guess it's possible, but then I also think those guys would probably not be the ones having or requiring an audit. So to confirm then, just quickly want to close this poll, to confirm then that we are required to have discussions with sufficient people so that we can get all the information. So for example, we should have a discussion with the so-called those charged with governance. The standard just refers to those charged with governance. In the case of a company, this is likely to be directors, people involved with the governance, not necessarily or not only the management of a company. So yes, the accountant is definitely important and relevant in our discussions, but it is necessary to also speak to someone higher up. And the financial manager is not necessarily the best or the only other option. Sometimes financial director, yes, because that is then often one of those charges, governance one, and where we specifically have questions with regards to fraud. In terms of what those charged with governance are doing about fraud to ensure that the controls are in place and so forth. So yes, having a discussion just with the accountant is not good enough. We should ideally have discussions with, I would say, a minimum of 2 people. And they're also important is to actually have I want to say a live discussion. What I mean by that is don't just take a list of questions and send it off by email and expect the person to give you all the answers and that's it. Yes, of course, there may be some questions that you're going to ask via an email or any other type of electronic type of communication. But when you're having discussions with clients to really understand what's happening in their business, it is exceptionally valuable and helpful, but it is really exceptionally valuable for a person to watch that other person's response, their body language. Are they hesitant before they respond? Do they, there's this thing that talks about body language and says somebody always looks to the left or right or somewhere before they lie. So I'm not saying your client's going to lie to you, but don't just send them an email and get a little, so to say, dead response to them. You want to hear the tone of voice. You want to see how they responded. Did they get a bit of a, how should I respond to this? Those kind of things before they respond. So that really is also important with your discussions with those charged with governance, and then of course with updating your understanding even. Agreed questions like, can I have this invoice or give me this list of invoices or whatnot? Those ones you don't need to watch the person's body language because that might not be so positive. More invoices. No, that's probably not the case. But it is important to also have discussions in person. I'm now being a little bit silly. Good. Then, what is the best method to test an accounting estimate? So in the session also, the recorded session, especially I think it is video 3, we really spend some time about accounting estimates and what the auditor has to understand about accounting estimates. So we do move on to how do you respond to it, how do you test it, but I want to just spend a moment here to say, please, ISA 540 has a lot of requirements about how you need to get an understanding about the client's accounting estimates. And yes, every accounting estimate is not going to be equally important, equally critical. Some of those accounting estimates you're going to get an understanding, you're going to see, well, it's not even a material balance, or it's really not critical, or clearly trivial. It is clearly trivial, maybe. And so from that perspective, you might not go and test that item. There's no risk of material misstatement. But it is important that we make sure that we get sufficient understanding about the accounting estimates. Right, then once we have then obtained that understanding of the accounting estimates, and now we have done our risk assessment, and we need to go and respond to the risk of material misstatement for some, at least, of those accounting estimates. What is the best method to test an accounting estimate? What would you say is one of the options? So maybe one of the options that you are thinking of that you're not seeing there is testing controls. So testing controls is an option under the old standard for auditing accounting estimates. It's really like more than 10 years ago. There, one of the options was also control testing. But because testing controls is never giving you sufficient appropriate audit evidence, it is no longer part of basically I almost want to say the shopping list of how to test them. That will be an additional item if you want to rely on the controls that is needed or that is used to ensure the estimate is appropriately done. So that is just one of the options to also add to that, but the control testing is not I just want to say your be all and your end all. All right, so we're seeing a number of responses coming through. Subsequent review of outcomes. I'm not seeing a lot of responses there. That is quite an interesting one. I'm not saying that is the right answer, but I am surprised to see that not a lot of you are selecting subsequent review. Maybe it's because you've had so much training on auditing estimates, and all of those difficult ones. Auditing accounting estimates is actually testing the subsequent outcomes of estimates is actually sometimes quite a nice way, an efficient way to test, but it doesn't always work. So if we test, for example, whether the client's provision for doubtful debt for trade receivables is sufficient, and we come there, let's say maybe at 2 months or so after year end, and we can see these are all the trade receivables the client had in the debtors age analysis at year end, and we can see that 95% of them paid after year end, and we check them to the bank statements, we can see that all of the debtors paid after year end, or there's only this one, and we go and investigate that one, and we find, oh, they are being investigated, and that's why they've been provided for. We can also go and look at what happened to previous year's estimates to go and see, did all of the debtors from the previous year actually pay, or what did we end up writing off last year during the year? If we provided for, let's say, 250,000 Rand worth of trade receivables that's not going to be recoverable, and we wrote off only 20,000 in the year, then we might have almost overestimated, but at least we didn't underestimate in that case, if you almost want to say, be positive about the situation. All right, I just want to see if I close that poll, because I've got so many screens open now that I can't see if I did close that poll, but we can then move on to the next part for our session. Let's close that poll. Thank you. But not right. I spoke about the subsequent review of the outcomes. Now, we've got testing management's estimate as one of the options as well. And the majority, it seems, said testing management estimate. In the comments, I saw a lot of points coming through for developing a point estimate as well. So those are your 3 options for testing the estimate. Testing management's estimate is management bring me your list or your schedule or whatnot. Let me go and see how did you calculate this provision? How did you calculate the residual values, the useful lives, whatever it was for your property, plant and equipment. And I go and I test the assumptions, the data, the methods, all of those things. If I come across a point where I say, client cannot actually, the client's given me his calculation, he made the wrong assumptions, or he made mathematical errors, whatever the case was, well, then I can't rely on management's estimate. What am I going to do then? Well, if I can't test subsequent, and I've tested management's estimate and it's a disaster, it's wrong, it's materially misstated, how am I going to know how wrong is it? I will probably end up doing my own estimate, even if it is saying your assumption of the interest rate or the whatever it is, or the useful life, or using just the tax tables to go and calculate what the useful lives will be, or using a zero residual value for your property, plant and equipment. Those are incorrect assumptions. Let's use the more appropriate assumptions, which we as auditors believe to be more appropriate, and calculate what we believe to be a more appropriate estimate, not just in general, but given your specific scenario, Mr. Client. So that's developing the point estimate. Of course, a range, developing the auditor's own range would be if it is something that's really tricky to then say, well, it's going to be between this and this amount. So the client's estimate falls somewhere in between, or actually the client's estimate is more or less, and therefore we don't believe the client's one is necessarily wrong. So the answer is it depends. You don't always test an estimate in the same way. So to say the best method, we actually cannot say what the best method is, because it's not always going to be the same method. So those are your three options. You need to choose the most appropriate one for the estimate for that scenario. Right. I just want to have a quick look at the chats again. I saw those comments coming through on the voting only. Okay, excellent. Good. That then brings us to our exercise. So in the tea break, I did give you the links again, showed you the links to where to download the copies of the case studies and of the working papers that we're going to use. So if you've opened or downloaded that folder, even if you're not working on the slides, there are 3 documents in there which I would like for you to open. But as we are getting to that, we're going to have a look at the schedule of audit differences from the client, and we are going to go and, from the previous year. So last year in the audit file, there were a few unadjusted audit differences, or overs and unders like we normally just talk about them. So there are mistakes that we found in the client's accounting records. They were not materially misstating last year's financial statements, and so we let them go. But in order for us to assess this year's financial statements, we need to consider whether those journal entries from last year, those unadjusted journal entries that didn't come into the final trial balance last year, that weren't adjusted for in the client's accounting records, are they affecting this year's accounting records? I think that's the most critical thing for me here is, yes, in the recording, we looked at management report items, and we considered whether those have an impact on this year's audit, whether it was perhaps a risk of misstatement in the accounts, or maybe about how we need to plan out doing our audit work differently, things like that. Now what we are doing is we are looking at mistakes we found last year in the audit file and saying, yes, the client decided not to change them last year because they weren't material. Or we said, you know what, this is small enough. We just want to sign these audits and audit file and get going. It's not material misstating the financials. Let's just leave it on the schedule of audit differences and sign the audit. Whatever the case was for last year, you knew last year you could carry them. The financials were not misstated and you carried on. But some of those will have an impact on this year. Some of them will probably, most want to say, just not disappear, but for some of them, you're going to see that you're going to reassess them this year anyway, things like that. But let's have a look at each of those instances and then see what we do. Now, in terms of assessing those points, I will show you the examples. So even if you haven't downloaded the examples, don't stress about it, please. I will show them to you on the slide as well. But for now, the questions we want to ask ourselves at this point where we are saying, what is the impact, or is there an impact from last year's unadjusted audit differences? When we look at each of those journal entries, we want to ask ourselves, does this misstatement continue to have an effect in the current year. So if last year the client should have made a provision or should have written something down or whatnot, what is the impact of that in the current financial year? Should it affect the trial balance? Because if it should have affected the trial balance, we need to go and see that it's appropriately responded to or appropriately addressed in the current year's trial balance. If not, well, then we need to bring that journal entry into the current year, basically saying that now needs to be an unadjusted audit difference in the current year as well, not for the prior balances. So it's not a prior journal that we'll process as a prior journal. We will go and process that as current year if it affects the current year's amounts. The next question is whether these accounting entries in the current, whether the accounting entries relating to this issue is correct in the current year, or whether it maybe corrects that misstatement. So for example, maybe last year the client bought, I don't know, let's say they bought a vehicle or something, and they recorded it as last year having that vehicle already. Well, or they didn't record it. But now this year that I have recorded it, they've processed the purchase of the vehicle. And so it's fixed now in this year's balance sheet. So then I don't have to go and do something about it. It is fixed in this year. Should the misstatement be brought forward, in other words, to make sure that it's treated this year? And then also, that was last year's journal. That was last year's scenario. Does this misstatement give rise to a risk of material misstatement in this year? So is there something that I have to consider? Is there maybe another audit risk that we want to go and record? Is there indication that the client has, I was going to say, a tendency to go and change something, get something else wrong? Like every year they get the cutoff wrong, well, then maybe we need to go and raise a risk for cutoff because we can see every year they get it wrong. So those are the 4 questions that we're going to consider as we work through the case study. All right. So now, next up, I want us to go to, if you have downloaded, let me just get my download folder to show you where it is. I clicked on it earlier on, so I'm actually just going to show you that downloaded folder. Let's get it right here. Okay, so when I downloaded it, okay, I'm going to switch off my camera now because I'm going to look at the other screen as I'm working through this case study with you. So once I've downloaded the folder and I uncompress it, I can open that up and it will show 4 documents. So the first document is, as you can clearly see, the slides for today. And then we've got these 3 documents. Now I'm going to open the first one that says prior overs and unders factual. Right. If you don't have this now, if you haven't downloaded it, don't worry, I'm going to show it to you on the screen so we'll be able to follow along. And then you can just download it afterwards if you want to. Okay, so what is this? Let me increase the size, the zoom. Good. So I believe you can see it quite well now. Right. So important things here for me is that it does stipulate it's the factual sheet. Now, what do you find here? So what I find, or what is important for me, let me not go to the slide, apologies. What is important for me to mention to you here is that these documents, you can see that they are numbered 10.50.1. That means I'm going to use them in the current year's file. We don't need a caseware file today, and I intentionally didn't open my file now because I know that some of you haven't watched the recordings. I'm assuming you then maybe haven't downloaded the delegates file yet, anything like that. So let's not worry about putting them into the delegates file. We're just going to look at the scenarios. If I remember, then maybe we can put them actually into the delegates file for next time. So make sure for the next session that is scheduled for the 6th of March, right? So that's about 3 weeks from now. When you attend that session, you've got downloaded the delegates file for the e-learning. You've hopefully watched the videos, and then we can actually open that engagement file and put these into the section as well. All right, so for today, we're just going to look at this. You can see this. What is this? Where is this coming from? Because I think that is important for you to know. I didn't pull it out of the thin air. You can see it is a case view document. So these ones are the documents from last year's case view audit file. In last year's engagement file, we had the schedule of audit differences reflected in the finalization stage. I see a question about where do I download the files. I'm going to ask someone from the support to maybe just include the link to where to download them. That was all under the learner resources under the success community. So maybe just if you could maybe just include the link for the success community, that would be very helpful, please. Thank you. So these documents were under the finalization stage for last year's audit file, where we had already recorded the schedule of audit differences. And then there were 3 case view documents. The one was, and these ones literally come from there. The one was the factual, the one will be the judgmental, and the one is the projected misstatements. Unfortunately, they don't all appear on one schedule, because when we give them to the client, we give them to the client in 3 separate ones to say, here's the factual one, here's the projected, here's the judgmental one. And also don't forget the disclosure potential misstatements that you have on the disclosure schedule as well. Right, so those ones might also need to be considered. Right, so we've got these documents, we've got these journal entries. Let's now consider them. The first one talks about insurance and prepayments. What is this? Last year, there was a difference in the pro rata insurance calculation in the client's accounting records. So what did the client do last year? If we look at this, we actually last year, remember this is last year's journal. In my preparation myself, I also got confused. So what the client has done is the client has actually, I'm going to just switch on my camera because it feels like I can't see you, but when the video is on, I look at the little light and then it feels like I'm seeing you. What happened in last year's accounting records? In last year's accounting records, the client recorded an insurance expense that was a debit. What they've done, though, is they must have recorded too much because we are taking some of that out. We've credited the client's accounting records from last year's audit file with 136,000, and we debited prepayments. Okay, so that is the journal entry that would have fixed the numbers for last year. Right. Here they say difference in pro rata insurance calculation. Let's go look at the slide and ask ourselves, does this misstatement continue to have an effect in the current year? Well, the client didn't correct it. So yes, in the current year, we would still actually have the insurance that had a prepayment. And so we would have, well, the prepayment was too small, so the insurance that would have been recorded or reversed in the current year would be too little. So we would still have too small an insurance expense in the current year, and the prepayment in the opening balance would be wrong. Okay. Retained earnings, which is where last year's expense would have gone, retained earnings would actually also be wrong in the opening balance. Right. So the first thing is, we know it's not right. We know the opening balances are wrong. But are they materially wrong? No, we know they're not materially wrong. Why do we know this? Because this was small enough that it didn't materially mistake the financials last year. So it's less than performance materiality from last year or less than final materiality, but we know it was not clearly trivial. It wasn't so small that we didn't have to put it on the schedule of audit differences. And we know that because it ended up being on the schedule of audit differences. So it's big enough that we cannot ignore it. Right. So we need to get this to bring it forward in the current year to get the current year figures ready or right. The ones that I'm going to audit this year, I need to get it right. Okay. Next question we ask ourselves. Does the account or do the accounting entries in the current year correct the misstatement? Well, where do we go this year? We will have the expense will be too little. The retained earnings will be too little, but the prepayments are probably going to be cleared if we had only paid it for 1 year. If the insurance was paid for a contract of, let's say, 3 years, then the prepayments might also have been wrong this year. We'll need to go and investigate. Thirdly, should the misstatement be brought forward? Do we have to fix it? Now, this is where you'll then go and decide, and you'll also, very importantly, your firm will determine whether how you actually bring these forward. So the standards say you have to consider the prior unadjusted differences, and you have to bring them forward, consider them, raise unadjusted differences for misstatements that are following through or rolling forward from the prior, but it doesn't prescribe a method. All right. So yes, you need to bring it forward, but how do we bring it forward? That's for your firm to decide. So what we would likely have done is to actually bring it forward. But what I would do is I would then debit retained earnings, because retained earnings, if we go back to the journal, retained earnings has a credit too much from last year's expense that was then rolled forward to the retained earnings opening balance. So I'll debit retained earnings and I will credit prepayments for this current year. All right, that would be my journal entry. And then we will cumulatively assess it again at the end of this year. So there's different ways. Some firms might say, you know what, I'm going to actually look at prepayments in any case this year and see if it was right or wrong. But if your prepayment cleans out this year, then that's not going to help us. Other people may say, I'm going to only assess the current year when I'm auditing the current year. So now let's fix everything from the history, from the past up to now. So it really depends on your firm's policy, on your firm's way of doing it. The important thing is that you need to do it consistently every year. Because if I do it the one way this year, next year I do it another way, then somewhere some of these mistakes are going to actually fall through the cracks and we're going to miss it. It's not going to be in our audit. All right, so that's the important thing, that we need to actually bring that forward. Now, when we then record this entry, I've already said when we bring the recording forward or record the entry, when we bring it forward into the audit file, we will record that entry as a current year audit adjustment, but still unadjusted difference. We will record that, as I said, debit the retained earnings, credit prepayments, and we will then put a note there to explain what it is that we have done. So if you do have the file, what you would basically do is you'll basically add a note in there to say what the matter is. So this one now is it will basically become your working paper. Okay, that's also why we have the wrap-up manufacturing. We are auditing 2023. So that's also why you've got the year end in there. It's an actual working paper from the current year, but the journals themselves come from the prior. So you would need to assess this and then document, actually add a note in there to say, what is your assessment about that? This is our audit evidence in your file. All right, so I'm just going to actually make a comment here. This is now not in Caseware, so we're not using the Caseware actual nice note functionality. But what I'm just going to add in there is to actually then document, and I'm intentionally, it's not quite big, but actually just to document there to say note 1. Hang on, let me just get to the right place. Note 1. I inspected the current year insurance invoice. Prepayments related to the prior, which were misstated. Let me just rather go to the next line. Misstated and have been fully expensed. The current year invoice, this is now important. What happened in the current year? The current year invoice is recorded as a prepayment. The prepayment will be raised. Oh, now I need to go, sorry. Just go to the next line again. Will be raised, will be reassessed cumulatively in the recalculation of prepayments and the misstatement. Next line. Statement from the prior year of the insurance expense will be raised in the expected journal. Okay, so that is now an example of how I will document what I'm finding, what my conclusion is about that first one. So I'm going to actually just put here a note 1 so that someone can also see that. Right? We want to make sure that we have that. So this is obviously not the best way to do this now. Ideally, I would have wanted to do it in the caseware file. As I mentioned, we'll do that next time to put them in and maybe just see how we get those notes in there. But being experienced auditors, I'm quite sure that you already know how to use a PDF as a working paper. So I'm not too worried about that right now. To me, the principle is, do you understand the journal entry and how to use that? All right, we are still busy with factual. I didn't ask or check what is a factual misstatement and whether you understand what a factual misstatement is rather than or as opposed to a judgmental and a projected misstatement. So let's just quickly recap that. So a factual misstatement is something where it's a fact, I can prove it, I can show the client, look here, there's your invoice, there's your journal entry. If I calculate this invoice across the 12 months, or whatever the case is, this amount is wrong. No one can actually, almost want to say, disagree with me because the facts are stating the obvious. All right, so these misstatements are then also most likely the ones that the client will be more inclined to adjust, to fix in their accounting records, because we can kind of prove it to them, we can convince them. The judgmental misstatements that we'll look at later on, those ones are the ones like the provisions, things like that, where somebody had to apply their judgment. And so their assumptions or their judgment may be slightly different to ours. The assumptions may be different, which will result in a different amount, or they might apply their judgment. Maybe they're a little bit more risk inclined and we are a bit more risk averse. Things like that will also then affect the balance that we are happy to accept or the value that we are happy to accept or not. All right, so that's judgmental. Projected. What is projected? Now, that is when we have selected items for testing through a sample. So not just selected material items, things like that. We have actually done a sample selection. What is a sample? Just to refresh your memory, it is basically testing a few items that are representative of a homogeneous population. So we are saying that if I test the sample of items, it will be indicative of the rest of the population. So I can project whatever I find in the sample, I can basically almost blow it up to be reflective of what's in the whole population. So in a projection, I basically take, if I find a 5 Rand error in a 1,000 Rand sample, and my population is not 1,000 Rand, but 10,000 Rand. If my population is 10,000 and my sample is 1,000, and I had a 5 Rand error in the 1,000, well, 1,000 is a 10th of the total population. So then I can project that the likely misstatement in the total population will not be 5 Rand, but 50 Rand. So basically, times 10. Now, there is a 5 and there's a 50. I can then say, well, the 5 I can convince the client of, I can show the client he made the mistake because I physically found it in a journal. But the difference, the 45 Rand, between my projected misstatement of 50 and the 5 that I'm actually finding, that 45 Rand it's fluffy. From an audit perspective, we can say it's a mistake, but the client will never process that 45 Rand because he's going to say, show me where the problem is. I'm not just fixing journals just because you say so. So the projected misstatement is almost want to say the last one that the client is going to fix. And so that is also why we listed separately, completely separately. And that is then always linked to our sample sizes and the results from the sampling work that we did. Okay, so we are back to factual, just having dealt with those 3 different types. And the next one that we are looking at is the commission paid. So again, commission paid, the expense is credited, 328,000 Rand. Accrued expenses is debited. So here, something about the expense. The expense was recorded before actually incurred. So in last year, they raised a future expense already in the client. So last year in the income statement, they showed a commission paid as 328,000 Rand. But that actually only resulted in, or actually was only an expense that it was incurred in the new financial year, the one that we are currently auditing, the one that we are considering this year. So again, let's look at our slides and our questions. Does the misstatement continue to have an effect in the current year? Yes, it does, because it shouldn't have been in last year's income statement. It should be in this year's income statement. Shouldn't be in this year's retained earnings opening balance. It should be in the closing balance, if you want, basically the income statement effect. Do the accounting entries in the current year correct the misstatement? So sometimes the client might say, oh, yes, I agree with you, but I've already closed off the accounts. I'll do that journal entry next year when I do the opening balances. That was not the case this year. The client just recorded it last year, happiness, and moved along. Should this misstatement be brought forward? Ideally, yes, we want that expense not to show in last year's accounting records, but in this year's accounting records. And then I just want to say the exciting question to me is, does this misstatement give rise to risk? So now you've got to consider, was this a once-off scenario where the client actually didn't know that only related to this year? And was a once-off commission, they won't incur that again. So you know what, we need to obviously address this, but it's not going to affect this current year. Or maybe they pay commission every year, and at the end of the year, they always want to actually show that in the accounts, even though we've told them it shouldn't be in there, but they still bring it in. So what's that then telling you? Then you know, well, we need to go look for that commission paid again at the end of the year, because they're probably going to record that again this year. Too early, record that expense when it shouldn't be in the accounts. Right, so clearly giving you an indication of almost like an audit risk that you need to go look out for in the current year. All right, so how will we then treat this point in our audit for the current year? So now I'm going to go make note 2 here on my working paper into, let me just scroll a little lower to make space for my note 2. Into what are we going to do here? Here we're going to say the prior journal will be brought forward to the current year. The accrued expenses in the current year, in the current balance, sorry, let me go next to the current balance, has already been settled in the current year, but the commission paid is understated. So this year, what was the journal the client did this year? He debited the bank account when he paid it and credited accrued expenses to clean that one out. So if the client had correctly brought this in, he would not have had accrued expenses. So you would debit the expense in the current year and credit not the accrued expense, because then you're going to raise it again, but you would credit where the expense from last year went, which is our retained earnings. All right, so that is journal 2 for the factual expenses. The factual audit differences. Let's go have a look at our folder. That was the factual ones. Next up is the judgmental ones. Judgmental, remember we said that's where the client, what is the word now? The client applied their judgment and then came up with entries. And when we looked at their judgment, we did not agree. All right, let's go and make it a little bit bigger. Oh, no, that's too big. Okay, so here you can see the judgmental list. And here we've got an interesting one that we come across very often. So here we have depreciation had a credit. We said we had to fix the depreciation expense last year. There was also retained income and then a debit to furniture and fittings. What is this? Well, this was a correction of assets, furniture and fittings in this case, the accumulated depreciation, that is reflected at R1 assets. And the estimated difference in the useful life calculation. So the client is estimating, not always really estimating, sometimes the client just uses other information, but when the client had to determine how many years they're going to use the furniture and fitting, what will be the useful life, they used what we regard to be the wrong period. And so they are writing off their furniture and fittings over a shorter period, which means that they are still using the assets, still gaining benefit, economic benefit from those assets, even though they are only reflected at R1 in their accounting records. And that's wrong. We should be showing that depreciation over the period of the useful life. So What did we do in last year's audit? Last year's audit and the years before and before and before and before, we have always been looking at this in a cumulative manner. So from the very start, we always kept track of the depreciation that they were writing off too much. So every year we say, guys, your useful life is too short. You are maybe using the tax tables, which maybe, if I remember correctly, it says 6 years or 7 years or something like that. I can't remember, maybe 12 years or something for furniture and fittings. But I know that you are going to use this thing until it basically breaks apart, which could likely end up being 15 years, whatever the case is. So you can't just be writing it off over 6, 7, 8 years. You have to be writing it off over 12 years, 15 years, whatever the period is going to be. And so from the very beginning, or maybe somewhere along the line, we caught up with them and we said, you've got to fix this. And so every year we have been accruing the misstatement or accumulating the misstatement every single year to say last year and the year before and the year before and the year before, you processed this to depreciation, shouldn't have gone there. So in our retained earnings, we are sitting with too much of a debit for those depreciations that are there. We're removing that in the current year. Then in the current year, you also then went and wrote off 159,000 of depreciation, which was too much. So we're not removing the full depreciation, we're just removing the part that needed to come out. And so from that then, we then do the put the debit to accumulate the depreciation, which is the balance sheet debit. That well, otherwise around it would have gone to that credit. So we need to remove it. Right, so that's what the journal entry is. Let's go and ask ourselves the questions from our slide. Does this misstatement continue to have an effect in the current year? I'm almost going to say absolutely yes with my hands in the air, because I'm saying yes, we know this is continuing to have an issue, because we've seen even in the journal entry that cumulatively every year this problem is growing and growing and growing. Interestingly enough, the straight lining of leases, and if you're dealing with an IFRS scenario, then your IFRS 16 calculation can lead to the same point. So the straight lining of leases can sometimes, I mean, furniture and fittings or property, plant and equipment can also lead to a bigger problem. But especially straight lining of leases, I've seen personally experience where in the first year the client doesn't want to fix the straight lining of leases, and then the second or third year that cumulative effect of the straight lining becomes a material misstatement. So in our scenario it still didn't become material, so we can still carry that on our schedule of audit differences. But in the straight lining of leases, there I have seen how that has to, I think actually it reaches that point where cumulatively that misstatement is now materially affecting the financials, and we need to actually get the client to fix it in their accounts. That is often almost, maybe I'm just boring, but very exciting to me if we can finally get that thing off the schedule of audit differences and fix it in the client records. All right, so the useful life of items is still incorrect, still affecting the current year. Do the accounting entries in the current year correct the misstatement? No, because it's continuing. Should the misstatement be brought forward? Absolutely. We've said there's a cumulative impact. Does this misstatement give rise to risk? Yes, the client will continue to do this incorrectly for the current furniture and fittings. And guess what? If they buy new ones, they're going to do the same thing there. So we definitely know we have a problem. Now, what you might find here is that we may not necessarily fix this journal entry, almost want to say as part of our opening balance testing right now in the planning series. We might get to a point where we say, well, just like last year, where we assess the cumulative effect, let's, rather than bringing this one in and then adding a second journal when we get to property, plant and equipment, let's just actually assess this cumulatively for the property, plant and equipment, or furniture and fittings in this case, at that point in time. So then we will put in a note, and here, if I just add my note thing again, our text in my working paper, I'll probably put in, remember it's a new working paper, so we can just do note 1, and there I will then probably document there something like, we have raised a risk regarding the useful life of residual values and residual values of property, plant and equipment, and there is a risk of the fact that the client is incorrectly recording them at R1 as a result of that. And so from that perspective, then the prior uncorrected misstatement is not going to be brought forward in this case. We will assess the cumulative error when we get to the property, plant and equipment testing and the auditing. All right, so that's basically the conclusion, is then to say, this one is continuing. We are going to assess it when we get to the section, but yeah, it is a mistake from the points that we've considered on the slide. It's all there, but we won't be bringing this one in and then later on doing it. There's nothing wrong if you choose to do it like that. It's just 2 journal entries, 2 separate points. But if you have raised a risk, remember now, let me just confirm this. So you've raised the risk in 1160 to say the client does not account for the useful lives correctly. Then in the section, in the audit section for property, plant and equipment, we will consider the cumulative effect. And that therefore will then probably end up, can almost end up with a very similar journal entry to what we are showing here, but then with the newer numbers. So if I can almost like just give a guess, in the current year's system of schedule of audit differences or unadjusted differences, I'm probably going to have this 400 is going to now be the cumulative effect, being the 559, and then the current year's depreciation, whatever that might be in the current year. All right. So that is then the journal entry for R1 assets, where we know it's going to move forward into the new year. We'll rather assess the cumulative effect in this case. But we do still have this on the working paper. So you'll see the first one, the factual ones, we numbered as 10.50.1. The second one, we've numbered 10.50.2. And then when we now go and look at the projected one, we'll have that one numbered 10.50.3. So the working papers are in the file, we've documented, we've considered it, and we know we can just move forward. Just make it slightly bigger. Right. Good. Oh, let me first look at the journal, of course. We can't go back to ask ourselves the questions if we haven't considered what is the issue. So yeah, the issue here is that we have an extrapolated, oh, I see a typo, sorry, extrapolated error on testing of the accuracy of expenses. So we did a sample to test the accuracy of expenses, and the client didn't claim input VAT. Right, so they recorded the full expense, they didn't claim the input VAT. Right, so yeah, we then had, so the expenses had too much input VAT there, and the VAT control account had too little input VAT. So to fix that, we had to record the entry, credit the expense, because the expense actually wasn't that much if we take out the VAT, and the client could have claimed another 159,000 in the current year. Now remember, this is the projected misstatement. So again, there is two ways in which this could have landed up in this accounting records. The first thing is the client could have just taken the full expense error. So that is, if we go back to my previous example, where I had a R5 error in a sample of 1,000 and then projected it 50 Rand over 10,000. So what is possible is that they could have put, almost when I use the example now in just typing, they could have taken the whole 50 Rand and put it here as an entry, where we could have also said, well, there's a 50 Rand error, which is made up of 5 plus 45, right? So they can either record the 5 Rand as a factual mistake, because they can prove that to the client, and then sit with a 45 Rand in this journal, or which sometimes is also referred to as the soft error and the hard error, the 5 Rand being the hard error. We can prove it, the factual one if you want. Or they can say, well, let's not bother with 2 journals. We are just going to take the full 50 Rand to the projected mistake and say, we found the error, the client didn't treat the VAT correctly, 50 Rand. Okay, so it can be either one of the 2 that I'm showing here, but the 2 together has to be on the schedule of audit differences between the factuals and the projected ones. So let's go back and ask ourselves the questions. Does the misstatement continue to have an effect in the current year? Well, maybe the client said, listen, yeah, I've already done my VAT returns. I've already got all of that stuff done. I have a few years, I think it's 3 years or something, to claim back the VAT if I didn't claim it. So let's close off the April 2023 accounts. I will, in my next VAT return, I will claim that money. So I will fix that also in the new year. Great, because I must say, there's not a lot of clients that's going to leave that kind of money on the table. If you can claim input VAT, you claim it. If you can legally claim it. So chances are that the client did, in fact, fix the accounting records in the new year and claim that VAT. Fantastic. Now my question is, Do you just accept that? She said, yes, I checked it. Look there, I claimed the VAT. Okay, we've gone, just check, yes, she claimed the VAT in the input, in the VAT submission. You also need to check that the actual general ledger is showing the right stuff. So does the general ledger show what would you expect to see? If we had a credit to expenses last year, you would have expected her to have a credit to retained earnings. Okay. Now, again, remember the client might not necessarily do the full 159,000. She might just do the R5. Okay. But at least you want to see. And also with that, if she does the R5, that's great. But what about the 45? That the client maybe go back. I mean, this is also fantastic if the client does that, if it is a bigger type of amount, especially when your projected statements get close to the materiality value. If they go back to their schedule and they say, oh, you know what, this was a funny one. This was the flights that I maybe didn't claim the input VAT, or this, there was some specific expense where I got this wrong. Every single time I got this VAT wrong. Or I might have made the mistake because I got confused in this expense. If she goes to that expense, maybe there we see sundries, she goes to that expense general ledger and she goes and checks every entry in there and identifies the actual misstatement and processes that this year. Then we'll go and check that she maybe got it right and stuff. And then we can ignore the 45 Rand because she fixed the 5 Rand error, the actual misstatements that we found, and maybe 1 or 2 or 3 others that she also found. But then we no longer have to do the projection because she's fixed everything, and we will check that she has fixed everything. Right. If that's not the case, then we will go and rather, let me just see that I've got the right ones. Yes, projected error. Then we will rather go and consider and say, right, the client hasn't done this, what now? So one scenario could be where we're saying that the client, over a number of years, they didn't record the VAT input correctly. So there was a mistake in the accounting records or something. And so literally over a number of years, they got this wrong continuously. And so this mistake is just carrying over, and we will bring this forward in the current year until they fix it. Okay, so it's also possible that it might just be something that isn't fixed in the current year. Remember, this was from the question number 2, do the accounting entries in the current year correct the misstatement? Should the misstatement be brought forward? If it's still ongoing and still affecting, we'll bring it along. And with that, if the report is still wrong and the client is still not able to correctly claim the right to input VAT, this is a risk in the current year. So yes, then point 4, does this misstatement give rise to an audit risk relating to the current period? Absolutely. And we'll need to go and consider that. Okay. So there in your working paper, again, you will document your note to say, note 1, of course, without your 5 and 50s and 45s, that was just my explanation, but document your note 1 there to say this issue is carrying forward, and you will then therefore process this again in the current year. Why can't I type current years? Okay, good. So that is our exercise in terms of considerations. I'm not so worried about can you process the journal entry in Caseware. I'm quite comfortable that you probably can do that quite well. The principle for me is more important, is that we need to remember to go back and consider the prior year's adjustments. Go and look at what was the unrecorded or the unprocessed or the overs and unders of the misstatements that we did find, and what is the impact of those on the current year? Do we need to do something about that? All right. So that was that one. Then we are talking IT. So again, in the recording, that would have been your video 3, the combined session for the second session, planning the audit or obtaining an understanding of the entity. There we talked about identifying the IT applications and understanding the nature of those IT applications in the business. Now, there we've got a number of considerations. So first of all, we need to understand to what degree does the client rely on IT. Secondly, we need to understand how complex those IT applications are and whether we can consider and get the understanding ourselves. And if we maybe need to test it, we'll get to the testing just now if we need an expert to help us to understand the system and or to test the system. Then we also need to, when we go and we consider system descriptions, okay, for your normal classes of transactions, we also need to consider whether those controls that we want to rely on, that we want to test for implementation, that we want to test for operating effectiveness. If I want to rely on a control, I need to ask myself if that control is dependent on any IT and whether there's IT risks there. And that's where a lot of people talk about ITGCs. Okay, so those are general IT controls, or IT general controls, if you want. I don't know why they ended up calling them ITGCs if the standard actually refers to general IT controls or general information technology controls. And so then we need to actually go and consider the design and the implementation of those IT controls. If I want to test the other controls, I need to go and test the IT controls and check that they are operating effectively throughout the period that we need to rely on them. So first thing was understanding the IT, assess the complexity of that, and then we get into the, I almost want to say, the nitty-gritty parts, understanding the IT controls, testing the IT controls, and more so there may be application controls, never mind the manual controls. So then also test those application controls. And for those kind of things, you're probably going to need an IT specialist if it is more complex. But that's where the basic thing starts with. We have to understand the client's use of and reliance on IT. So yes, it really is important for us to not just rush through this. There are different documents, there's different methods, different things that we need to consider. But if we go back and we look at the audit regulators' inspection results, time and again, year after year, the results are that auditors are not placing enough emphasis or sufficiently understanding and gathering enough audit evidence about the client's use of and the reliance on IT in the audit environment. All right. Then there was something else that just crossed my mind. No, I can't remember that part. That point on the slide that says a common problem is a system used in testing, never mentioned in understanding of the IT. So we'll get an understanding of, let's say, how the payroll accounting is recorded, or how sales are recorded, or whatever the system description is that we find. But then when we get to the point of actually seeing what the walkthrough is, what the control testing is, they are using another system there, another report, another whatever it is, that they never actually mentioned in the understanding of the IT. So they might say, oh, yes, we use Sage, or we use VIP payroll, or whatever it is that they're using. And then when you get to testing the actual controls and looking at the reports that they've used, there's another element in there that was never mentioned in the understanding and never used in or tested or implementation considered in the walkthroughs. So very, very important that even when you go and do the actual testing, you go back and you say, have I documented this in my system description? When I look at system descriptions and identifying controls in those system descriptions, often I come back to saying this is almost too much a theoretical exercise. It's almost like writing out a system description for an exam question and not actually writing what's happening at that client. Even controls. I cannot test for a control that's not in my system description. So we have to make sure that when we are understanding the client's IT, when we are documenting which systems they have, when we are understanding it and testing it, any of those things, we need to make sure that all of those things are consistently documenting what's happening. And here the challenge is, yes, we can start with last year's file again, like we started off initially, saying we can use the client's file, we can use the client's prior audit file, but we cannot just rely on that. IT changes like that, systems, technology, the possible uses, the functions that we have, just the applications. I mean, you can use one accounting package today and a totally different one tomorrow. Yes, please, the rollover and all those things are important, but it is important that you understand what the latest, what the current versions are that they are using, and consider what the impact of that is. One of the most critical examples also that we come about is, like, for example, if we talk about journal entry testing. we'll have a scenario where the team documents that journal entries can only be processed by these 3 persons. Great. How do we know it can only be done by those 3 persons? Because the accounting software limits the rights for processing journal entries to those 3 individuals only. Fantastic. Then when we get to testing journal entries, that is a significant risk. Journal entries is part of how we need to respond by testing journal entries. We are responding to the management override of controls. So we have to go and identify controls over journal entries, and we have to go and then, if we can, test those controls to see if we can rely on them. So, sorry, never mind test the controls, do the walkthrough of that control and understand the design and the implementation and get evidence that we've understood the design and implementation. Right, then we go and do the walkthrough, and we've spoken in our system description to say only these 3 people can do it, but nowhere in the system, in the walkthrough, nowhere in that walkthrough does anybody actually mention that they go and test the accounting system to check the matrix, to go and check that only those 3 people do actually have the little tick boxes, if you want, for allowing them to process journal entries, and that nobody else has, and that nobody else had those access throughout the financial period. All right, so that's really important. That's like a critical point to ensuring that this fraud risk is in fact addressed, but we don't actually go and consider that. Good. All right, we are nearing the end of our system, of our session, so I don't want us to necessarily have a comfort break now. I just want to quickly check. I'm actually looking at the chats. I haven't seen any questions coming through, but if there are any questions, you're welcome to put those to the chat just now. Let's consider a few common problems or some extra tips of what you can use and consider going forward. So first of all, the planning documents should not be treated as tick boxes. It's not just an exercise in let me get this one completed so I can move to the next one. It really is about understanding why you are doing what you are doing, so that we can identify risks, so that we can properly plan the audit. Because if we are just completing documents, then we might actually miss critical parts of understanding the audit, critical parts of what we are required to do. Then we have to think about why. I've mentioned the why now already, but we have to understand why is this question being asked. If we think about ethics, if we think about the rotation schedule, any of those kind of points, if you don't understand why this question is here, what am I trying to achieve by answering this question, by performing this procedure, then you've got to go and identify and understand it. Even if you are searching the auditing standard or something, but you've got to understand what you're doing. Otherwise, you are going to miss some of the obvious points that's going to probably come across your desk and you won't realize it. Next, thinking you don't need a client input. The client has to give you information. We cannot just sit somewhere in a corner and just complete the work as we need to. We have to go and speak to the client. We have to engage with the client. You cannot just do a so-called box job like we used to do in the old days. You used to literally get a box, almost like a printing paper box, and all the client stuff was in there, and you could just complete the audit documentation without ever speaking to the client. It's not possible. It's just not possible. We have to think about the impact of what we are documenting now in terms of what happens later on the file. So not just I'm ticking something here to activate it later, but also if I'm documenting something here about related parties, how is that affecting my work on related parties later on in the file? When I get to that section, do I remember to about these points, or do I need to go and record a risk if I come across that risk? Also, separating our studies or our CPD, what we know about the requirements, the auditing standards, the IFRS accounting standards, the tax, any of those things, and the practical work, the application, what we are doing every day. Those 2 things talk to each other. You have to remember those 2 things need to come together. And sometimes it's possible that a working paper from last year someone might not have realized things have changed. Someone might still be doing the way things were done, compliant with an old standard, with an old requirement. And every year someone just looks at the last year's file and didn't think about it. So if you're looking at a working paper, even if it was last year, or even if they say this is the template we're using this year, think if that is compliant with what you are learning in your studies. And if it's not, speak up. Okay, ask, consider, make sure that it doesn't need to maybe change. Maybe it has changed and you're using the wrong version. Maybe it should have changed and nobody realized. So either way, you have an opportunity there to actually add value, not just to yourself, but also to the other teams and, of course, to the audit files. All right. Then another point, that second last one that says we do work on a section just because we want to be cautious. Okay. The ISO 315 standard says you only have to do work for where you have in fact identified risks. So if I come and I ask a person, why are you auditing this section, or why are you performing work on this assertion when you didn't record a risk? They often say, well, because the client often gets this wrong. So we rather want to test it, be cautious and know it's right. If the client gets it wrong, that's indicative of a inherent risk. So let's record the inherent risk. Even if that risk is low or medium, it doesn't have to be a significant risk. But if that risk is recorded, then we're going to record why that thing is there and actually respond appropriately. Okay. Then lastly, if we want to win the race, we need to keep a pace. So stay ahead with what changes, stay ahead with when there are what's new rules, or when there are new templates in the software. Make sure that you use those items so that you can actually keep current with what is changing. All right. In conclusion, I think I've said this a lot of times, the planning of the audit is critical, and you need to make sure that we have an effective audit, but also an efficient audit. So gathering sufficient appropriate audit evidence. It's not just about completing documents. It's also about having that audit evidence to show to someone if necessary, when necessary. Think about why you are doing something, the objective, rather than just getting it done, and always update your understanding, because it does change from year to year. And then when all of that is done, you're going to get that trophy at the end of the day. Doesn't always feel like a trophy, but then you'll get a well-planned audit. All right. Just looking at the track schedule. So what you should have done already would have been the e-learning module 1. Right? If you haven't done it, don't worry. You can still do it. It's not going to close off. It will be there. What I would like to encourage you to do is obviously to watch those videos before the 6th of March, but I think also very important to watch the extra module 2 before our next session. So module 2 only has 2 videos in there. It's got the combined session that talks about the theory part, and then it will have either your Audit International or your Probe Audit Premium methodology videos that then shows you how that is applied on the methodology that you are using. And then we will get together again for session 2 on the 6th of March, where we will discuss then the next parts to planning. So, of course, you can get ahead with the others as well. If you finish those and you want something else to do, those are also still there. But I would like to ask you to do your best to please try and watch these videos before we join again, so that we can, so that you can just get the most benefit from that. As a reminder also, if you didn't get the link, if you can't get into the link, send an email to that email address that we have for Get Ahead, so that you can also get assisted, or even respond to the link that you got for today's email. There is an email, that same email address is in that email, to ask for your activation of your module on e-learning. You can also self-enroll. So if you get to that e-learning module, and you can also self-enroll. If you forgot your password, or if it asks you for your password and you don't know what it is, just click forgot password. That's easy as it is. And then the last thing I want to mention to you is that we have loaded the survey that I would like to ask for you to please complete for us. So that is in the chat. There's a link for you to please go and just complete the survey. Again, it is anonymous, so I rather want your honest and your open feedback, rather than necessarily wanting to say, oh, this is what Johnny said, or this is what Susie said. So please, yeah, but if you think I might need more information, you're welcome to put your name somewhere. Yeah, we really just want to know how much value did you get from this? What value did you get from the videos? And if there is something more that you need to give us. All right, so that's it from our side then for today. Yes, thank you so much for your participation. I really enjoyed getting that input from your side and being able to work with that. So thank you. And I'm already looking forward to seeing you then on the 6th of March for level 2. Maybe I'll see you in the meantime for one of the other tracks as well. Goodbye.